we called it a debate last week about Delta, the
Uh-huh,
Delta
uh-huh.
dog.
Hey, we can
And
all win. Listen, we can all win. We can all
it
win.
was a
Some
debate,
just some just
and
one
we
more.
and we kind of had a, like a would you rather, or which side are you going to be on?
Hmm.
And, coming back to report a week later, whether you chose to go Delta
You're
with
happy.
which matches trade, could
You're
match
happy.
trade, or whether you went to Theta with my trade, you are happy either way. So there's a virtual high five to you, my friend,
Mm.
for a good pick. And now here we are. Let's have a conversation about number one, trade management for anybody that got in. I'm in. And then also, if somebody missed it and didn't get in, how would they prepare for that secondary pattern here on Netflix, and how would that approach
Hmm.
it? So one, trade management, and then two,
Um,
how do we re-up and do this again?
First of all, if you're on the Delta side of the equation, you shouldn't be in any longer.
Exactly.
Either one, you were scaling out at T1, or two, you got stopped out in probably yesterday, is what I would say.
Yep.
And so you're probably out as the directional trader. And if you're not out yet as a directional trader, remember this principle: you don't want to be the last to sell. And once that pullback starts happening, you got to adjust that stop loss. And if you're not doing that, we have a coaching program for you that can teach you and hold you accountable to do certain things. Okay, that's number one. Um, Not much I can do about that conversation here today. We need to get back to the education on that one, because that's an easy trailing of a stop loss on a power candle like that. Um, on the theta side of the equation, it could be a little bit of a different conversation. I didn't do the bull put, so it could be a little bit of a different conversation. But my assumption is that if you sold the credit for $1, like for example, if you were looking at a credit on Netflix right now, and let's just go out 31 days just to kind of see it here, Em, and you sell that 20 Delta contract right now, for example, and you're bringing in 90 cents credit, right? That
Mm-hmm.
90 cents credit is called net liquidation. You
Yep.
need to liquidate that value over time. Over the next 31 days, they're just going to liquidate that to zero. And
It
so
took
you
about a week.
and but again, that's just based on theta, right? Em, on a
Yeah.
power move that you had on this candle, where you went from three, kind of, I'm pretty sure you put on the trade that day, Em. So when you
Oh,
went
yeah,
from
put it on that day. It was
335
literally in like two
to,
days. Yeah.
you go up 16 points. Well, that 16 points has a delta of 20, which means you're for every dollar up, you're going to have 20% of the value come down. And so you bled that theta. Like you just did. And theta can bleed out over time, or delta can just evaporate theta. Like that's what delta does. It evaporates
Mhm.
theta. And so basically, either way, you're probably out. You're probably out. And so the question is, as of right now, was this just one trade, or is this a trend developing that we can maybe do this a couple other times on?
Mhm.
Well, Em, I know the theta trader in you. You're I guarantee the very second that thing touches the 9 EMA, you're gonna be like, I got enough. Let's lob another bull put. We got our $90 last week. Let's go get another $90 this week and see if we can rinse and repeat it. You got cash to play with. You might as well go play with it to a certain extent. So I know the theta traders out there very, very, very well. And if there's something they love more than selling a bull put spread against a bullish pullback, I'm not sure what it is, because they love maximizing ranges on bull put spreads. And so it's tough to chase a credit the same way it's tough to chase delta. When something is overextended, you wait on that pullback, you can sell that underneath support. So I would say for the theta trader's probably looking at Netflix and they're saying three inside candles. Okay. Okay, we got enough. Maybe you wait for another down day, or to maximize ranges, but I do think you have enough just to go out to the market and say, "Let me sell a bull put spread." We're not talking about a market assassin type trade where you have to pinpoint your accuracy on entry, stop, and target. Right? You're talking about a bull put theta strategy where you're basically playing zone defense. So as long as you can sell underneath 316, I think you're fine. As long as you can sell underneath 316. So let's see if we can sell underneath 316. Well, if you can go out to 316, you can come in, you can get a 315 contract. You can sell that vertical, and you can bring in about 47 cents. And you might say, well, Matt, that's 47 cents. I can get 90 cents if I sell the 330. Yeah, you can get 90 cents if you sell the 330 contract right here. And that's fine. That's an 80% probability of cash flow, $90 of cash flow against margin. That's going to be around 22%. 22% with an 80% probability of successfully cash flowing as long as Netflix doesn't cater. I think that's fine. I think the conservative trader would want to sell underneath this pivot to make sure that they don't have any management. You probably have some management if you sell the 330. You probably do at some point. You don't have a lot of management. You sell 315 here. So I do think 315 is a debate here against that, because you're underneath pivots. It's a very low delta contract. And so it's one of those situations where, yeah, you can get it right now. Now, if you get another down day, and let's say we get another down day tomorrow, and you instead of we're talking about the stock at 355, we're now talking about the stock at 350. Well, then you can sell that 315 contract, and it's more like a 16 delta, and it's more like $70 in cash flow versus a 50. And so I do think you got a little bit to play with here. Maybe you can give it a little bit of a day. But aggressive, I think you're selling a 20 delta on a pullback, and the conservative trader says, doesn't want to manage. They're looking at this pivot point at 316 and saying, let me just sell right underneath 316. And if I can get that one more down day, that allows you to match up your delta numbers and a little bit higher cash flow, which is probably what you're looking for.
Indeed. Even the conversation last week when we were looking at it, we were looking at that 315 as that support zone, and we built on a bull put trade underneath that, and it will be the same exact thing, but maybe another down day. Give me one more.
And again, I don't think selling above 315 is necessarily out of the equation here, because you got a lot of support levels. I'm just saying, if you do get that one more down day, 315 is a really, really, really good strike to look at.
Yep.